Welcome back, everybody. For this session, we're going to have Proximus starting off. Frank ROESSIG and Surash PATEL, who are already waiting to come on stage here to tell us about the Omni-Channel client satisfaction journey with secure digital ideas. So here we have a telco pitching to the financial industry. Interesting times, and I'm sure you'll tell us a little bit more about Proximus and Belfius doing this love thing in banking. So we look forward to that too. We have the fire chat afterwards, a little bit more about ESG regulation, and then the panel on the relaunch. So this is what's ahead of you. I hope you all enjoyed a good coffee, and we're going to learn everything about that digital journey with secure digital ideas. Go ahead.
Hi, everybody.
Good afternoon, everyone. As you can see the title there, I'm going to move on. So we've got some good news and some bad news, and Frank and I tossed a coin, and I have to do the bad news first. So this is what happened during this COVID era, and how is this going to pick up when it comes to how we move forward. So what you see here is some digital identity learnings, and I guess there's three things here. One is fraud is on the increase, 56 billion in fraud apparently in 2020. The important thing to note that 13 billion was traditional, which is attacking your infrastructure. The other 43 came from identity fraud. So this is actually defrauding the consumer or your employees. Now that's a really big important number, because that means the weakest part of people's security today is actually the consumers themselves, and that's what we're going to talk to. So we can see here 1.3 billion blocked accounts on Facebook, which again just highlights that fact. The second thing is that users, all of us are users, we don't like to give our data away easily. So we see in many, 50% of cases, people actually give incorrect data, especially things like date of birth. And then the third thing that we see is that attacks are getting more and more sophisticated. So, last year, the year before, it would have been lots of cyber attacks. Now it's actually cyber attacks automated plus with humans. What you see here is actually a picture that was left on someone's front door. And it says, "I'm self-isolating, please leave any deliveries in the box below." A fraudster has stolen someone's address and had some iPhones delivered to this house, and then put a note on the front door to say, "Leave items in this," so they could pick them up themselves. That's the level of sophistication that's going on right now. We've talked a lot today all about cybersecurity and consumers. And one of the things that we all know now is that consumers are more aware. I know in the earlier session this morning, they were saying that, 20% of people didn't know what phishing was. But we as consumers are more aware. And as a result of that, we're increasingly less trustworthy of the brands with their data. There was a survey in the US of 1,000 consumers by PwC, and they said, people just don't trust us. They don't trust brands with the data. And so what they do is they provide false data. As I said before, typically the date of birth is often false. I was at a conference last week in London, and just to register for dinner, they were asking me for my date of birth. And you think, this is ridiculous. Why on earth are you doing that? And so we need to learn as an industry that asking for too much too soon is never a good thing. And here you see a slide of, well, what happens when fraudsters do attack? What are the vulnerable areas of attack? How do they actually get into these accounts? Typically, you see here, 30% of the time, it's email that gets hacked into. 20% of the time, which is close to us as Proximus, obviously, it's a phone number that gets hacked into. And people are able to take over people's accounts and then try and do fraudulent transactions by doing this. So what's happening here? What are we talking to? We're talking to the risk balance. So on one side of town, no doubt today, there's a whole bunch of marketeers sitting in a room talking about the fact that they're trying to get more and more customer conversions. And the regulatory guys on the other side are saying, no, we need to check. We need to check for PSD2. We need to check for smart customer authentication. We can't let all of these potential fraudsters in. So you've got this balance between marketing and regulation going on in many firms today. And what we hope to do, and Frank will talk to this, is we hope to explain how, by using things like progressive onboarding, which is only asking for the information when you need it, making it clear to consumers that this is the information that I want and this is why I'm checking it, and that's what Frank will talk to, that we can actually get through this period post-COVID where more and more of us are online, but most importantly, consumers are trusting the brands with their data, and then brands are looking after that data. I hand over to Frank.
Thank you, Surash. I just realized we were all pushing the same button today. Okay, anyway. So here's the good news, digital acceleration. So what this first graph on the top left shows us is that in the year after COVID started, the acceleration of online consumption was equivalent to the past 10 years before. A huge spike. That's where your clients all went. And interesting enough, it's not only the millennials for whom you may have initially designed these systems, but actually everybody, including the seniors. Now, it's not as simple as that, because if you look at the top, the bottom left basically, the services they want to consume online really depend on what it is. So you see the proportion goes from like 10-ish% if it goes about, structured advice and so on, to I want to check my account balance. Nobody wants to talk to a human being for that anymore. Right, barely, okay? So when you want to digitalize, prioritize according to that line, right? What do actually people want to consume? It's not everything online immediately. Now, the other interesting thing, bottom right, is how much of this will stick. And interesting enough, we took a few examples out of the retail industry. We can translate this to banking, just clearly saying, okay, a lot of what people have done online, it's really minimum 40% goes to 80% will stick. They say, I will continue using these services online, right, in the future. So this is the framework we're in. We accelerated whether you want it or not. So going from there, basically, it means going omni-channel. So why would you want to go omni-channel? What does it mean? Omni-channel means that a client can interact with you online through a voice channel, basically also in a branch, and it'll be seamless, right? And they can choose to do that how they want, but also it means they can use any device, so a phone, mobile, a tablet, a computer, right? And it also means in this device they can use different universes, so they can communicate with you through SMS, to an app that you're giving them, or maybe also to WhatsApp. Increasingly, consumers want to have their choice of communicating with you and consuming your products, right? That's what it means. Why do you want to do this? Actually fairly clear, because here, 73% of the clients use different channels. And they consume up to 3 times more if they go omni-channel. So if that's not compelling, what is, right? So basically, how do you make it happen? So to make this happen, basically, this is inspired by SCA, PSD2, but actually that's, combined with ADAS is the framework that we operate in Europe right now. So there's something that they know. It could be a password, a passcode, a sequence, and so on. Then there's something like the client owns. So basically, it could be a mobile phone, it could be a dongle, some kind of device or whatever, a card, and basically another big building block of it, and I'll talk about it a bit more, is basically biometrics. And biometrics is more than we think. It's digital, it's facial, it's the voice, it's the iris, but it's actually also behavioral. And I think what's important, by enabling these 3, you create 2 things. On one side, you create basically convenience for the client, but actually you create the thing that enables interaction with you online or in multiple channels. That is trust. It only works if you create a trusted environment. And I made this little arrow that goes back to it, and I added behavioral, right? It's part of your personality. Increasingly, people are integrating your behavior, whether it's accordance with what you usually do or not, as part of this. That's why there's a feedback loop in there, right? And this is the technological framework you need to operate. And the more of these you see the different types of IDs, the more of these options you can actually enable, the more you can make things secure and basically convenient for your client, right? It includes, as an example, fallback for an ID. There is an option that if an ID doesn't work, that you have agents that pop up online, quickly control an ID within minutes because they're professional and provide a feedback. These things exist. You should integrate that in the design of your client experience, right? Now let's have a look at the future. What is waiting for us? So one is personalized. What does it actually mean to personalize it? So you gather the information about the client and the client segment, and you make sure that the interaction you provide to your client is actually relevant to them, right? Not something you throw at them and they don't care about because they won't look at your next message. The other thing we believe has an impact is voice. So not only is it biometric, but we think that people are going to increasingly talk to machines because of convenience. It's easy. Now, you don't want to do that in the bus when there are 200 people around you and talk about your financials, so you still need the option of typing stuff. That's not what I'm saying, but if you have the option, you should use it. Augmented. So the big announcement was made now about Metaverse. Actually, we already looked in 2006 at Second Life. It is clear that if you want to interact in the future with your consumers, you need to be in these universes to provide them inputs in augmented reality, right? Actually, already in Second Life, which is basically Metaverse, over 10 years ago, some car companies put some fictional cars in there to see what design would people choose in a universe where there's a currency that's worth nothing. And they would take out of there the information, say, actually, this is what they dream about. Now let me transpose that into reality, right? 2006, okay? That's when it started. And the other thing, it might seem like totally like an illusion or so, bionic, but actually in Scandinavia, certain sports clubs, they do biohacking sessions. They inject a little chip here, it doesn't hurt, especially if you had a few drinks, and now they open their locker and access to their fitness clubs with this thing, right? So it's already happening in certain industries. Don't discount it yet, it will happen, right? So basically, thank you for listening. In our view, the future basically is multi-channel, and it will be enabled by a combination of two things. One will be convenience to the client, but also trust of your clients that they can interact with you. Thank you so much.
I even have the oil for you. So yeah, you made a remark. We want to show people we harass you with a mask, so we're going to give you some alcohol to make sure that
Thank you.
So, but there's good stuff too, which you are getting now, right? So. Our next fireside chat is with Professor Dr. Bruno COLMANT. I think he needs little introduction, so please come on stage, Bruno. And we have Johannes Vermeer, the CEO of POM, and you are gonna tell us all about CBDC.
It's not going to be me, it's going to be Professor COLMANT.
Okay, I can warn the audience that you have these CBD cannabis oil shops popping up all over your town. It's not about that one. It's another fashionable hot topic, so go ahead.
So, first of all, I hope it's not too warm. Oh, and of course, I think people will want to hear you.
First, I would like to apologize to all of you because I got some laser on my nose. So if you see some black stains, they are real. This is not the metaverse. You know, they will disappear in a couple of days. I have just to tell you, it's happening to me. So you're not surprised or frightened.
We will not notice, and then the lights are a bit dimmed as well, so we can't really see it, so that's okay. First of all, in the name of Fintech Belgium and myself, I would like to thank you very much for your presence here today. And we will dedicate this fireside chat to digital currencies. You see that many central banks are considering the creation of digital money. We hear or heard about ECB talking about the e-euro. People's Bank of China has started with the e-Yuan. And even the US Federal Bank, or US Federal Reserve, announced in September only of this year that they are looking into an e-US dollar. So central bank digital currency, or CBDC, is becoming a very hot topic for central banks. Also on the 14th of July of this year, the European Central Bank announced that they would launch an investigation phase around the creation of the digital euro. And they will do this investigation over a period of 2 years, in which they involve consultations with different stakeholders. Our own national bank, of course, is also involved, and they created a group. It's called the National Retail Payments Committee that is also getting feedback from people in the field here in Belgium. And I'm one of the representatives there representing Fintech Belgium in this group. So that's why I'm sitting here. But before we go into the details and more the consequences of these CBDCs and these digital currencies in general, maybe a first question in the basics. What is the definition of a digital currency?
Well, you know, the whole thing started in the 30s, after the big crash of New York in 1929. There was one guy, a well-known economist at the time, called Fisher. He was American, and the guy came to the conclusion, rightfully so, that money is being created two ways. Money is being created by central banks. We call that the central bank money, or basis money. But at the same time, 90% of the money being created is being created through what we call the credit multiplier. It means loans make deposits. So when you make a deposit at a bank, it may lend to another party, put on account at a second bank, and so on and so forth. So with €1, $1, you can make up to 15 euros. And his idea was that in case of booms and busts, banks would accelerate the boom and the busts. Because if the economy is doing good, the velocity of the credit multiplier increases, and there is too much money being created. And when the burst happens, all people feel obliged or are obliged to repay their debts, and so the velocity of the money decreases, and it hurts the economy. So his conclusion was that only a stock of money being created by central banks should prevail, and that commercial banks should be confined to a role of getting deposits, but at the same time being obliged to put the money back at the central bank. And I wrote a book on that 2 years ago, and without knowing at the time that there would be CBDCs, the last chapter was devoted to that. And I thought to myself, if one day this happens, it would be a digital currency created by central bank. And so this is where we are today. So the whole idea is that a stock of money will be created by central banks as if all of us would be allowed to be on account with the ECB, which means that there would be two kinds of euros, the euros being deposited at commercial banks, retail banks, and the ones up to 3,000 euros being put on account at the central banks. Of course, they would keep the same value, but they would not be fungible, because one would be a stock, the other one would be a flow.
So that means, but then don't we have already central bank money? Because you have the cash. I would say this is central bank money because they're creating it.
It's central bank money. What is very important is to keep the unicity of the value of the euro, because the day it happens, if for some reason a euro put on account by me at the ECB would be worth more than a euro being put on account at a commercial bank, there would be a kind of an exchange rate between the 2 euros, and this cannot happen. The other thing is also that if a central bank if I would be on account with the ECB, probably the interest I would get would be zero, because there is no interest on a banknote being issued by the central bank. So the whole structure would be changed, and it could be that the credit worthiness of a commercial bank would be measured by the interest that bank has to serve on a deposit, knowing it would be nothing on an euro being put on account at the central bank.
Okay. So could we consider then CBDC as like the digital version of cash money,
Yes,
or central bank,
exactly.
which is being created by the bank?
Yeah.
And then, okay. And then what could be done with the digital euro that can't be done now with the normal euro?
There are multiple theories today. Some people claim that these CBDC should be used only by corporates, for commercial transactions. Other people say it should be extended to everybody. We will see. Maybe it will happen in 2 stages. But the question is to know, why would a central bank do that? Why would a central bank provide extra security to deposits on its own balance sheet? Well, if we go back to the 30s, when the theory got invented, that was to get a direct financing of public debt by retail depositors. So all of us, instead of financing public debt through the balance sheet of banks or insurance companies, would do that partially through the balance sheet of the ECB. And of course, we see that the ECB already carries up to 40% of public debt being issued by Euro land countries. So that would be a way to provide direct financing to government through the central bank, but also, and this is the big deal, to check what we would do with these euros, because if they would be secured by any kind of identification, call it a blockchain or any other technology, then there would be private life issues, because it could be so that the central bank could know what would happen with the euros put on account on its own balance sheet. And if one day, assuming it would happen, all the money would be on account with the central bank, then the role of commercial banks would disappear. They would be there to receive deposits, being obliged to put back the deposit on the balance sheet of the ECB. If they would need some money to grant a loan, they would need the permission of the central bank to grant a loan. But then at that stage, it means that all the flows would be tracked down by the ECB or by any government. It could be also possible, and this is a little bit dystopic, but why not, to promote the sale of some services, to prohibit the sale of alcohol or cigarettes or to change the price, to stimulate the economy by putting a negative interest rate, or to slow down the economy by suddenly increasing interest rate or our deposits. So that would be a major shift, and we see that happening already in China.
Okay, so really banks would have control over the way you could spend your CBDCs, which of course they can't do if they talk about cash, which is...
Their statement today is that it will not happen. And recently I saw an article in EFT of one guy, working for the ECB, saying that the role of the digital euro would be to ensure the unicity of the euro, but we have already the unicity of the euro. So definitely there is something behind it.
And that could be one of the things. And this reminds me a bit of what happened in 2020 after the COVID. So in the US, Donald Trump sent to every American household $2,000 to stimulate the economy, and apparently more than half of it, 58% to be exactly, remained on the bank accounts, on the saving accounts, so to pay debt. So actually it wasn't actually used to stimulate the economy. With a CBDC, the government could, or the ECB, or in that case, of course, the Federal Reserve of the US, could have imposed people to use it, to consume it.
Absolutely, that's a very good point, and I can relate that to another theory that was invented also in the 30s by a guy who was German, but at the time he was born in Saint-Vith, which is part of Belgium today, but before the war, the First World War, it was part of Germany. And the guy invented the concept of money that would lose its value every week. So you, in order to keep the nominal value of a banknote, you would be obliged to buy a stamp, to stick the stamp on the note, so that the inflation rate would be controlled by the government. Because if you would not put a stamp, the nominal value of the note would decrease. Exactly what we have today with the negative real interest rate. We know that when we put money on account, in deposit, in a savings account, at a bank, we lose the inflation rate. That was this idea. And that to stimulate the economy, people would be obliged to use the banknote instead of holding it. Because if somebody would put the note in a safe, definitely it would lose money week by week. So if we have one day CBDC and the authorities, taken as a whole, would decide to stimulate the economy, there would be one easy way. That would be to say, you know what you put on account, on a saving account, on my balance sheet, will be decreased by X micro% every day, every week, name it, everything, in order to force me to use that CBDC note. And again, that would be a total control of the rhythm of the economy by the central bank. We are back to the idea of Fisher, and Fisher made a statement long ago, 8 years ago, that the government would be the one to know what would be the ideal pace of the economy through this, what he called, Chicago plan. It was called the Chicago plan. Maybe if you hear the word Chicago plan, the plan of Chicago, because it gave birth, by the way, to the Chicago school, the quantitative school, it relates to that idea.
Okay. But of course, this has some downsides as well, of course, because at that moment the government gets more control over the consumption of the people.
Yes.
And should we fear then a little bit what is happening, like for instance in China, where you have this more and more totalitarian control over the people?
Absolutely.
So that's a risk that we face with this CBDC.
That's a big deal.
Yeah.
It's a big deal indeed, yes.
Okay. If we go a bit more behind, okay, how will it work? And the CBDC is this. Of course, we have all the blockchain. We have this. I just heard 14,000 different cryptocurrencies already. And the first cryptocurrency was launched, Bitcoin was launched in 2009 already. Are they going to use blockchain for the CBDC?
Honestly, I'm a big fan, a big believer in the blockchain technology, because, and we will see, that the value of the Bitcoin could go up to 1 million euros because it will be used more and more. The decision today has not been made whether to know if the CBDC would use a blockchain or any other technology, because there would be probably some energy issues that will be raised by some parties at some point in time. But the point is not there. The point is to keep track of the money. So how would it happen practically? You would open an account with a retail bank like ING, to name it, and that same deposit, in a bilateral way, would be put on account at the ECB. So there would be a label on the deposit showing that it is held by the ECB. And the security of that euro doesn't need to be ensured by the ECB as long as the retail bank can make a link between your deposit and the same deposit that bank makes at the ECB.
So there still will be a role for the commercial banks as well, and they will.
Yes, but if you go down the way, you know, at the end of the exercise, the credit multiplier would disappear, and so the money being created by the flow of money, the existence of multiple retail banks, would create no value at all. Maybe there would be some value left because you want additional services. And to me, what I see that happening, you know, the banks that are intelligent enough to know that being confined to a role of being a pure banker, you know, the banks who understand that are developing additional services like KBC and Belfius in this country. I saw multiple examples in Asia of banks, you know, creating their own money by a kind of gamification of money, which is a way to create your own money with additional advantages. And so it could be that we will see, you know, the coexistence of these CBDCs, normal money like the one we have today, and the cryptocurrencies that will remain after the collapse that will probably make clean up the market.
So probably there comes a time that also banks will create their own cryptocurrencies.
It could be.
It could be.
You know, it could be. It leads to. There are so many ways, you know, happening today, like the decentralized finance. Banks, as they are today, belong to a model that probably, not immediately, will be overhauled by technology. If we enter into a pure DeFi world, that means that the concept of a bank balance sheet who is there to centralize deposits and loans may be deeply affected. We will see, of course, the banks will remain in business because they will keep some regulatory, you know, powers that they keep today. And the other thing is that traditional currencies, as we see them today, are called legal tender, which is a word that everybody has forgotten, but it means that money that is being featured with a legal tender cannot be refused as a payment in a specific zone, geography, meaning that if I owe you 100 euros, you can refuse diamonds, gold, silver, anything, but not euros. And so it could be that the power of this legal tender will be exploited by banks and will give them a competitive advantage in comparison with cryptos, but I'm in uncharted territories. I do not know.
Okay.
I do not know.
Just looking into the use of cryptocurrency, and we had this official release of announcement of El Salvador that also accepted Bitcoin as a legal tender some months ago. I think it was still this year. Some other South American countries are following up. What is your idea about this? What do you think about this, about the fact that countries are accepting Bitcoin, for instance, as a legal tender?
The day, if you take the Bitcoin, the day, not one bank, but several banks decide to accept deposit in Bitcoins and to grant loans in Bitcoins, then you may create a credit multiplier denominated into Bitcoins. But I suspect governments will push that back because it means that there would be two competing currencies within the banking sector, and it would mean that people would choose which currency they would decide to use as a mean of payment, knowing that governments need to keep the privilege of the legal tender because they need to levy taxes and to borrow money in the same currency. When the government would issue a public debt, the currency, except if you swap it, but at some point in time it has to be paid in some currency, the public debt should be denominated globally in the same currency than the one you are using to levy taxes. And so you could imagine that you would have two competing credit multipliers, but at some point I do not see governments accepting that quite easily. So I see a world where there would be normal money in the first stage, CBDCs, and probably some cryptos that would remain in a kind of ecosystem. It's like with the metaverse. Huh? You can go online to offline, but you can also remain online in closed universes. And that would be also one of the developments one has to consider today.
The word has fallen, metaverse. I think we also heard it in the previous speakers. We're also talking about the metaverse. For the older people in the room, the ones that have played Second Life in 2006, which I was part of them as well. So it's a Second Life 2.0, we could call it, or the Internet 3.0. Cryptocurrencies are probably going to be the means of payment in this world.
Yes.
Is there a place for the CBDCs?
No. I suspect that the CBDCs will remain in the offline world, the physical world, whereas in the metaverse, once all the metaverses of this world, will be vaguely harmonized and maybe concentrated or linked together, there will be multiple cryptos being created by ourselves, by communities, and that's why I do not know what will be the ending point. There are so many unknowns. Nobody knows what will be the monetary world, 20 years down the road, or even 10 years down the road. But what I feel happening is that there would be, as I was saying, normal money as the one we know it today, CBDCs that I would keep in the offline, world. There would be one or two remaining cryptos like Bitcoins, kind of competing, in specific ecosystems with these legal tenders, CBDCs or normal money. And then I would see probably a third layer of cryptos being created in the metaverse with maybe some confusion at some point in time. But I don't know. Honestly, I don't know because it's too soon to say. And in the middle of all that, you have, but this is more linked to the metaverse than to the CBDC, you have to admit that day by day we are entering into this decentralized finance world. So multiple unknowns. If I had to write a decision tree, about the future, I would be totally unable to do it. But so we are probably, and that's what I thought when I saw the Bitcoin and the CBDCs, we are at the start of a revolution as big as the one which took place in 1715 when an English guy, Scottish maybe, called John Law, invented, or I would say stabilized, the concept of paper money. When money that had a value per se got represented by something that was representing the value itself. And so probably we are close to a revolution with multiple initiatives, but again, I do not know if there is one, what will be the ending point.
Okay, thank you. Are there some extra questions in the room? Somebody having a question from Professor COLMANT?
Raise your hand and I bring a microphone.
I don't see anybody for the moment.
Come on, this feels like going back to school, to university. You can ask the professor the questions you have in mind. No bad ones out there. Haha, Marc Toledo.
We do have one.
Don't give us the beginner questions. Go straight to the advanced level, please. It works.
Professor COLMANT, we're speaking about CBDCs, but we see in the United States a lot of private initiatives issuing stable coins based on US dollar. We see Facebook issuing stable coins based on several currencies. So why would we not expect a currency based on euro? We've got already in France the Euro L, which is issued by Société Générale and Groupe Casino. So that would be interesting to see what will be the effects of this alternate stable coin on the economy.
Again, it's hard to say because the raw material of capitalism is money, and nobody knows what is the quantity of money being currently used by the economy, because money is a stock and a flow at the same time. I have the intuition that when you increase the stock of money being printed by central banks, the velocity of the credit multiplier decreases. I do not mean there would be a constant between the two, but there must be, some competing effects. So what would be the effect of stable coins? There would be the transposition of CBDC created by the banking sector or some other operators. But since they should normally be backed at some point in time by real euros and dollars, hopefully, because otherwise you create a currency that is called a stable US dollar or a stable euro being guaranteed or being stabilized on the credit worthiness of the issuer, meaning that it is guaranteed by the equity of the issuer that is always lower than the one of the central bank with a printer of last resort. I think that it will not create major economic impacts. But again, I may be wrong. We'll see. There are so many things happening at the same time that I would be totally unable to give you the final picture. I would be richer than today if I would know the final picture.
More questions?
We got
Yes,
another question as well.
Jean-Louis.
From our president.
I have maybe a stupid question. Actually, money is important for a state or a region to exist and to make sure that you have transactional and commercial transactions. Now, there is also one aspect is the geopolitics. At the end of the day, when you look at China, the way they are controlling their money, if you see the competing regions, the US, Europe, and China, I'm asking myself, these digital currencies, what is their role to play in these international exchange? And what is actually, at the end of the day, the interest of a state, of a region, to impose somehow things that they need to impose? Petrol we don't have, gas we don't have, some other raw material we don't have. So what is your view on the geopolitics impact?
Well, anything can be used as money. Some people claim that the joule with an energy measure could be used as a currency. That was a famous idea of Keynes in 1944, that instead of gold, the money should be backed by 30 products, coal, wheat, or name them, everything, to get a basket of currencies guaranteeing the money instead of gold. It's hard to say what will be the impact of these CBDCs on international trades, because that was one of the big hurdles Fisher could not solve in this theory when he created that in 1933, because exchange rates reflect normally the relative strength or weakness of a currency compared to the other ones. So if you decide that the stock of money should be imposed by the governments, notwithstanding the natural flow of capitalism, you distort exchange rates. It's exactly the same when you create fixed exchange rates with economies where it doesn't work, like it happened, in the sovereign crisis in 2011 in our economies between the north and the south of the euro. I do not know, but I think that if one day the credibility, let me put it this way, in terms of geopolitics, the US dollar would account for 60% of all transactions in the international trades, because the US, has the military power to intervene, any place on Earth. I think they have 12 or 14, aircraft, carriers. Yeah. The Chinese have 2.5. If one day the credibility of a CBDC can overcome military force, then it may change things. But again, I don't know. I cannot figure out, I cannot sketch the final picture of it.
It's very nice to end in an open ending, Johannes, because
We ended in an open ending, and that would
good.
also be my conclusion. So my conclusion would be, we are at the beginning of a revolution, but we don't know where it's heading to. That's my conclusion number one. But it is going to be a financial revolution, that's for certain. And the second thing, it's going to be hard finding an ATM machine in metaverse where I can get some CBDCs. That's for sure. That's for sure.
That's a good conclusion.
Okay. Thank you very much. Thank you very much, Professor Colmant.
Great summary. Thanks for that, Johannes. Professor Dr. We still have some gifts here. So
Thank
the
you.
physical goods are still possible to as a method of exchange of value too. So our gratitude is in the bag. Thank you very much for that. And we now have our last panel in the main room. We might go a little bit into the coffee zone if we find it as interesting as this chat. While the technicians are setting up the stage and removing the fire, I will already invite all the speakers to come up front. So as you can see, this is going to be about the relaunch. Lots of experts. We have Joris, LOCHY, Caroline, LANSLOTS, Didier, ONGENA. We have Benoit, SEYS. We have CIJNSMANS, and Emma, SEZEN, will be moderating. So there are microphones up here. I will pass you this one already. I will also leave the gel here. You have your fixed one. That's great, fantastic.
Thank you.
And I will put another one on the table here as soon as the table arrives. No, I'll put another table here. Go ahead.
Oh yeah, I haven't seen the chair. So hello everyone, my name is Emma SEZEN and I'm the head of AI for Finance Ecosystem Initiative powered by Startup Inside. And I'm very happy to moderate this panel, which is about a major issue of the moment after the COVID-19 crisis. Yeah, I know we're not going to talk about COVID-19, but the major issue is now relaunch. And for this, I am welcoming here on stage Caroline LANSLOTS, who is the Senior Business Development Manager at Tink. Welcome, Caroline. We have also Joris, LOCHY, so the Product Manager Payments at Monizze. Welcome, Joris. We have Didier, ONGENA, the General Manager of Microsoft Belgium and Luxembourg. Welcome, Didier. And we have CIJNSMANS, the Business Development Manager at Metamaze. Welcome, Yo. And at the end, at last but not least, we have Benoit, who's the Head of Customer Experience at Bit4You. So first of all, maybe before starting, could you please introduce your companies for those who don't know you yet? Who wants to start? Maybe Caroline. Ladies first.
Hello. It works. Yes, good afternoon. I'm Caroline LANSLOTS. I work at Tink. We are a Swedish company. We were founded 10 years ago in Sweden. We now have local offices across Europe. We have built Europe's most robust open banking platform with API connectivity to the banks of Europe, and thereby reaching 250 million consumers, banking consumers. And we build, based on the connectivity, we have a tool set of data products that we offer to our clients, and our clients are banks and financial institutions, but also fintechs, PSP, startups. And with those tools, they can build services for their clients based on the financial data that they aggregate through the open banking APIs.
Thank you. Who's next? Benoit?
Yeah. So Bit4You is the first and only crypto exchange platform in Belgium. We started operations in 2018, and the first Bitcoin transaction was done by our Prime Minister, then was the Minister of the Digital Agenda. We are not under any license in Belgium for the moment because the regulation is not yet there. We are expecting it, and I guess we're going to talk about it within minutes, as this is one of your questions further down the discussion. We are a real pure player in a sense that without any regulation, we only propose to our users to buy crypto, to trade them on the platform. We have 40-ish of the biggest one. We don't have the 14,000 that are available. We also allow for some of them, when they are traceable, to send and receive cryptos by the blockchain. And finally, we allow the customers to withdraw money on their bank account, only via Visa transfer, so that we can trace the whole money scheme from A to Z. So pure vanilla player, no stacking for the one who knows, no shorts, no leverage, well, pure vanilla. Since the very beginning, it has to be noticed that due to the DNA in the company, we have a very, very strong KYC and a very strong AML. So all the bankers here know what it is. And on top of that, we have a very strong KYT, which is the know your transaction. Because the money, well, you know the story about blanchiment d'argent and whitewash health, I've just named it, which is today practically impossible through our platform. Basically, that's it.
Perfect. And maybe Joris.
Thanks. So Joris LOCHY, working as product manager for Monizze. So what is Monizze? Is a social voucher issuing company in Belgium. So what we do, we issue meal vouchers, eco vouchers, gift vouchers, and also more recently, linked to the Corona Relaunch, the consumption voucher. And so how do we do that? It's the employer that buys vouchers from us. Those vouchers are then granted to the employee via a fiscally interesting way, and then we have a payment method via an internal specific card that can then be used in a closed network of merchants on which are affiliated with us, where these vouchers can be spent.
Thank you. You have another mic here if you want.
Hi. Joris CIJNSMANS from Metamaze. What we do is we are a Belgian scale-up who build an intelligent document processing platform. There's many of them today. We started building it 3 years ago, now serving clients in Asia and Europe with a clear focus on financial players in the Benelux market. We're about 25 people, and I hope to give you some insights on what's it like to be a scale-up in today's economic relaunch.
Thank you. Didier from Microsoft. As I think many people know Microsoft, I'll take the opportunity to also say that we have launched a specific cloud for a financial services institution, which is really based on our general cloud platform, but that leverages API and industry-specific data and IP. And then next to that, I hope, if not, I have not done my job well, that you've seen that last week we have announced that we would bring the Microsoft Cloud to Belgium by launching a data center region, which allows us to really decrease by like multiple factors latency, which is also important in this industry, and also obviously provides data residency in Belgium.
Thank you very much. Well, as you may know, in July 2020, the member states of the European Union all voted for the European Commission, which has undertaken to borrow 750 billion euros, that is a huge amount, on the markets to support the European Recovery Plan. And while the Commission raised its first funds last summer, this money is now to be used for the national recovery plans. And for this, they had to present each one's plans and respect the priorities set by the Commission. And among these conditions is the investment in digital technology. So now we are going to discuss how fintech and tech companies can contribute on the relaunch. And first question is, how do you see, maybe you can share your point of views, we have many profiles here. How do you see relaunch and what are the key factors of this? Maybe Didier, if you want to start.
Well, I think first of all, what we've seen is obviously a lot of digital transformation through the pandemic. Some say that we've probably seen a couple of years of digital transformation. We've also seen, I think, that clarity that organizations, both public sector organizations, but also commercial organizations that were digitized were more resilient. And so for sure, I think that has helped a lot. With regards to the recovery and the relaunch, let's say, challenge, what we're seeing, at least in our industry, is that level of employments are already pre-COVID. So one of the big issues that we are having is just capabilities, building technology capabilities, hiring people. On top of that, you might have heard about something we call the application paradox, which means that actually collectively we're supposed to build like 500 million applications in the coming years, which is more than what we have built in the last 40 years. So one thing that is absolutely critical will be the skilling and capabilities that we are going to build, in my opinion.
And so maybe you want to share your...
Just go down the lane?
Yeah.
Yeah. What we see at our company, and I can only speak for a tech scale-up, is that we see that there's two types of companies. One that are heavily investing into digitization, automation software, all these types of things. And we see that those are the ones that were ready for these types of crises because they could downscale, scale up, and they were possible to handle like weird situations, like different volumes. And I believe that's important even now in special times that you keep investing in these types of digitization initiatives because you're not sure what the future brings, but you want to be ready when it comes to that you have the right technology to be capable to handle these situations. And it's the same with home working. Everybody's using Teams, so I applaud you on that. But lots of companies weren't ready. They weren't even using it before the COVID crisis. So you have to install it up front to be ready to handle those situations. And I think that's one of the main key takeaways that we see in the market right now.
Yes, I can agree to that. Of course, we've seen changes that have been that maybe before occurred over the course of a decade, that they have now occurred over the course of just a few years or just a few months. So I guess on the topic of open banking in our vertical, that's definitely true. Our clients are banks and financial institutions. So I guess for that vertical specifically, they have actually been given a wake-up call to invest more and into innovation. But also caused by, or also a need to change their operating models or their business models because of the shifting consumer behavior, but also due to the fact that there has been an increased market credit risk from the pandemic. So I guess what we've seen also from recent study that we did ourselves on the topic is that we see that banks and financial executives, at least, they have a few priorities. One of it is indeed investing more in innovation and the shift toward digital services. So fintech, tech, talent is all a high priority. And then versus the changed consumer behavior, I think there's a priority to build differentiated customer experiences. Also to build on commercial opportunities and also to keep them close and keep them engaged, basically. And the latter one, or the third one, would be restoring profitability in relation to changing their operating models, becoming more efficient, and optimizing their processes. So we actually see that open banking can be an enabler for that. And that will be on a number of things, and we see the key open banking product areas would be in the risk decisioning space, but also in terms of money management, where they where banks, financial institutions can help clients live a better, healthier financial life, and also then to improve their processes.
Thank you.
I will bounce on what Karin just said. On the contrary to the three previous speakers, we are a B2C organization, and God bless the pandemic for us. Sorry to say that, but they had time in front of their PC. They were bored by the Teams meetings, sorry to say that. And as previously said by the first intervening person from Proximus and VeriSign, the people are getting more knowledgeable about what cryptos are. So for us, it was a perfect jump. Now, looking forward, by the way, we multiplied by 10 our operations, and we were ready for that because we are digital natives, and it's in the DNA of the company. And now, well, talk, we see that inflation is getting there. So for us, once again, we had a good boost because people had time. Now people have money because there is a relaunch. and they will be able to put their money and to change them into values by buying crypto. Crypto is digital gold, especially the Bitcoin is a digital gold. Gold is one of the anti-cyclical assets that you can buy. So just about Relaunch, we are quite pleased.
Okay, thank you. So for me, Relaunch, the best Relaunch is when people have confidence in the future. So, and that's what's already mentioned in the previous talk with Professor COLMANT, is that people need to consume. And governments, obviously, they can give subsidies to companies, but they can also help citizens to consume. And so, which was already mentioned in the previous talk, that in the US, they just gave a lump sum of money to everyone in order that people would consume this money and would boost the economy. Now, in reality, like it was said, a lot of us staying on the saving accounts. In Belgium, I think it was done more intelligent. What we have seen, and we were part of it as Monizze, is that the government decided that the employers could give a fiscally stimulated consumption voucher to their employees. But what is the big advantage there is that this money needs to be consumed because it has an expiration date. And additionally, it needs to be consumed in Belgium, and it needs to be consumed in specific sectors that the Belgian government wanted to boost. And so it shows that these vouchers is a way to boost, to put the Relaunch in a very specific way, but it's still limited, let's say, because it still has certain frictions with the card, and in the past, even with paper vouchers, which, like Monizze we did, is much more digitized. But it can go further, and that's what the discussion was in the previous discussion with the CBDCs, can be the next step in towards these digital vouchers, let's say, and to really give the means to a government to stimulate the economy in a specific way.
Thank you. So we all agree to say that digital adoption has been accelerated crazily, like digital transformation in different industries, and the financial industry is a good example. But what are the main challenges that remains today? Yeah.
Well, sorry, we can go back that way. Yeah, sure. So what are the main challenges is, of course, in our sector, it's the complexity of the industry. So we're active in the payment industry. That means the cash register systems. There are multiple cash register systems. There are hundreds of terminal brands. There are different protocols and so on. So we need there the lack of standardization, the complexity of the model makes innovation very complex, because obviously you cannot just say, I come with a new payment means, but it can only be used in one shop. So that is the first complexity. Second complexity is, of course, regulation. So the regulation is, of course, on the one hand, it can drive innovation, but on the other hand, it can also be blocking innovation. And so there it's really important that governments and regulators put the right kind of regulation in mind, that they don't focus immediately on a solution that exists today, but on a requirement on how the market should be regulated, so that it also keeps open for new ideas, new innovations.
For us, we have one major challenge is that we would like all of you to open an account, a wallet, and do it for you, because it's time for each and every citizen. We are a test market often. Belgium is a test market to really get the people speed up to understand what Mr. COLMANT, Dr. COLMANT said. We are at the beginning of a revolution in the financial world. How money, how value will be traded, how value will be decentralizedly managed, and we would like really to be, for Belgium, to be and all the people to be ready. That's the first challenge we have. The second one, given the beauty really of the blockchain and the simplicity of it, we are really excited to onboard very talented people. Sometimes it's complicated. I guess you have the same issue. We are competing from time to time on those profiles. We are not lacking, but we would like to have 25 new schools of IT in Belgium. I know one of your competitors is doing it. You are doing also extensively training. We need to have our Minister of Education to understand that IT, finance being closely linked, need to be learned as early as possible at school and as for so many persons as possible.
Yes, I can echo a bit on both of you, because regulatory challenges are definitely there. We are, of course, in the world of operating in the world of open banking. It has been around for a number of years, but still it's very early days. The basis of it is regulations, the PSD2 regulations. There's still a ways to go to make it more pragmatic and effective, but also the state of the open banking APIs can be improved into the future. But I guess apart from that topic, I would say that there's also still room for customer adoption. So I guess that's what we see in open banking, is that there are already millions of clients, customers using open banking services and sharing their consent to share financial data with other organizations or initiating payments. The technology has matured. And so we've kind of set the right basis for it, but there's still a long way to grow, and it has to do with customer adoption, but also with the fact that organizations need to find a better consensus of how to deliver those projects more successfully. So it's basically for our clients or banks, financial institutions, organizations to find the right use case for open banking, not so much like we're going to do something on open banking, but which one specifically, which is targeting the right group of customers, which has a large enough size so that it can actually bring the right results. And then we can also grow the customer adoption along the way. And like we see, we've indeed, there's a good place for open banking and for services like ourselves to enable that.
Thanks.
And we are regulated, yes.
Thank you, Caroline.
Licensed.
Sorry. Yeah, for us, we face two main challenges, and one is related to people, and I'm happy to hear Didier say that they have struggled to find people as well, because I'm a bit surprised. I thought it was more of a scale-up thing to hardly find the right people. But it's not only in tech. We see it in every domain inside our company, finding the right salespeople, project managers. I think it's more of a labor market thing than just tech profiles. And then the second thing that we face is a perception problem in the markets, maybe on AI and newer technologies, that since the crisis, they went from we need to have those things to maybe a nice to have in some cases, that people take a step back and they're a bit hesitant to go further into those innovations. And that's something that we see, that's something that we try to convince also large banks, insurance companies, that it's no longer a nice to have. If you're not, for our part, automating your document streams with AI, you're basically missing the train. And that's not only for document automation, but also for other interactions with your customers. If you're not digitizing them, it's no longer a nice to have. Your competitors are doing it. So for us, that's the main challenge, convincing large institutions that they should move ahead with this train, and that is no longer innovation. It's basically, we've been doing it for 3-4 years at banks, so it's no longer a nice to have.
I think at Microsoft we have obviously the opportunity to serve many customers, and I think there is one thing that is a little bit worrisome for me, is that actually since the pandemic, but it's not changing since then, is that for the first time we've seen actually big and large companies outgrow from a technology spending small companies. I joined Microsoft 18 years ago, and in the last, or in the first 15, we had the same pattern. We had or global and strategic accounts kind of growing single digit, and then the more you had smaller companies, the more they were growing their technology spending at a fast pace, and that is changing. And so if there is one advice I could give to, I think, some excellencies were also here today, is I think there is still way too much friction in the system for small and medium companies to benefit from the Relaunch and Recovery or Resilience and Recovery Funds. I think that's the official name. Still too much friction, and I think we as a tech industry probably need to do the same thing. While there was some expectation that cloud would kind of take away some friction and would make it easier, we're seeing, and I think it's linked to capabilities, to competencies, to skills. We're not seeing a large number of smaller organizations not participating in that transformation. I think that's probably our big challenge.
Thank you. And so talent, regulation, these are main challenges of the Relaunch. And just about regulation, you mentioned it as a challenge, but how regulation can contribute also to the Relaunch? What would you wait for from regulators today?
Well, I think because my comments actually on friction is actually the same on regulation. What you're seeing is that a lot of regulation is kind of barely affecting actually the bigger players, but is putting a lot of friction actually in the system for small and medium. I think one thing that we should think about is, because people need trust, people need clarity, is how we find ways to translate regulation in some level of certification. For instance, one of the initiatives that I think is interesting is how, for instance, ISO is kind of publishing standards that are emulating GDPR. You can't be GDPR certified, but you can be ISO certified, and if it's emulating GDPR, that creates at least clarity for customers. That's maybe a kind of a train of thought that I think would be interesting.
Yeah, again, for us as a scale-up, it's a different point of view, but what we expect, and as you say, small and medium enterprises, I believe we're in that category somewhat. What we experience, and then in terms of GDPR and privacy, is that sometimes it's not really clear for us, and also not clear for the banks or the insurance companies that we talk with, how they should put these new technologies compared to that. So I think there's a need for more clear guidelines and open conversation on these topics, to like not hamper innovation, but make a framework that you're able to do these things in a regulated way, but not doing them in 2 years' time, while it could be developed in 3 months maybe. And if regulation takes you back 2 years, then I think it's not the right regulation.
Yes. Yeah, regulations. We've heard today, I think it was the panel before us, that regulation is good, right? It opens opportunity, and I think that's also true. But maybe it takes a bit of time for regulation to mature and to really be effective and pragmatic to a certain use case. And therefore, I think that counts for also the regulation in open banking specifically then to our topic. Which is driven by PSD2 regulations, and I think it takes a bit of time to mature, basically. And we can see that there are the regulators look at what is happening in the market, right? And they take their learnings from it, and then they should make some iterations on that to make them more pragmatic. And maybe one example for it is being, on the market of open banking, is that we've raised the PSD2 regulation before, meaning you as a consumer giving consent to sharing your financial data, that would go for 90 days, for instance, and now they've made that 180 days, which makes it a bit broader, actually, for financial organizations to build the good solutions on it. So it has been a learning from just being out there and just looking at the market and looking at the players there to see how we can make it more effective.
Thank you.
Regulation, what is that? No, we are welcoming regulation. There is a lack for it in the crypto sector, once again. We are begging to have it as soon as possible. Remind you that there are only 3% of the people having in the world having a crypto wallet. And I would like to echo on what Charles Michel said a little bit early. The regulation must be first ambitious. It must be ambitious. The idea is to allow conversion without forgetting the inclusion path, because unbanked level of people is very high. having a wallet, digital wallet, would be as piece of cake to be done. So we are welcoming it. We are expecting as soon as possible, with these 3 attributes: being ambitious, looking for conversions, and without lacking the inclusion that it could bring. So yes, we are expecting it.
Thank you.
Okay, thanks.
Joris.
So yeah, same message for me as well. So regulation is not bad. It's even something that should be pushed, but it's the right regulation that fosters innovation. And if you see it, for example, PSD2, it has created how many fintechs haven't been here today that are here because of PSD2. And I think if we go one step further to open finance, open insurance, and even open data in general, it would open a lot of new opportunities for thousands of new companies. Imagine, for example, having access to the open data of your receipt ticket in the supermarket. If you get that information, then you can think of thousands of new user journey cases, use cases. So definitely the regulators should push even more to open the data and to because that can bring in a new innovation and also bring in the new relaunch then, let's say.
Thank you. And we have a few minutes left, so just maybe a question about your prediction, your crazy prediction for the next 5 years, if you want to share. Yeah? Benoit.
Well, I don't have a crystal ball. And you know, in Belgium, I don't know many Belgians here, next Saturday is Saint-Nicolas. So let's make a wish list and then maybe a prediction. So my wish lists would be to have what we just discussed previously, is to have a digital euro. Percentage, 90%, I guess. My second wish would be that there is not a digital identity, but an identity for the digital world. You are born on the 7th of January with blue eyes, with a national number. You live 22 Street, blah, 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 and you have an account. Why don't we provide that to someone, to everybody? Every European citizen should have a digital domicile, an email address, an official one, why not? Should have a digital account, it's a wallet. We believe it will be a crypto wallet, and should have a digital signature, allowing to give the information that I want to provide to my bank, saying, okay, when I go shopping to Carrefour, I buy 2 bottles of whiskey a week, then I hope it will not go to the insurance. Those are all the type of questions that we have to ask when we ask for more openness. That would be my 2 dreams, my 2 points on the wish list. There is a third one, but I do not dare to say it because I wish that the Minister of Finance would be also the Minister of Digital Simplification, because those 2 worlds are now so much intricated that I guess probability is close to 0. So that would be the 2 main wishes. And the prediction, have you seen the film Ready Player One? Who saw it? Ready Player One? Someone saw it? Well, yeah, half of it. Well, I really believe that everyone should see it, or read the book, it's better. Because the metaverse is described in this film as what we will see in the coming 5 years. I have a twin, they are 10 years old. Within 6 years or 5 years, they will be 16. They are fully native digitals, right? Fully native digital. Zoom would be totally normal. Having discussion in French with a Swedish or Chinese counterpart, speaking your own language, which, deep language is already there. DeepL is there. So the metaverse will be embedded in our life. And I see 4 main areas of where this metaverse will take place. Of course, business, as I said, speaking your language, meeting everywhere in the world. Of course, and I hope that it will be the largest part, is education, because everyone could be educated everywhere in the world. I hope that the Belgacoms, the Proximus of this world will provide high bandwidth, because it will be incredible what could be learned by kids in this metaverse. I believe also metaverse will embrace culture in heritage. I would be able to see the Taj Mahal on the morning and then go and dine maybe in Dubai, and then the day after see the Sphinx. And of course, all the gaming and the entertainment side, playing yourself a character. And I just hope that we won't see any troubles like, well, a dead or late lovers to make him revive. It can happen, but my bet or my prediction is within 5 years, the metaverse will be in our daily life going on.
It's a bit frightening.
Might be a little bit frightening. I don't know. Well, all Azure cloud system in the world would be very happy. People will have to be checked everywhere. You will be able to mail and to take vouchers in this world. It's a second and parallel world.
Thank you.
I'll keep a short answer. No worries. That's a lot. I was going to say the same thing as you. That's scary as well, like the meta world. But I will keep my answer in the open banking space, right? So I go with Joris. So better regulation, which is effective and pragmatic, but also open finance. So not only the transactional data, but more and more and more data that can be shared. And also the fact that us as consumers, that we can actually be the custodians of our own data, so that we can hold it with us and use it in a digital space where we feel comfortable sharing that data in exchange for enhanced services and enhanced customer experiences or other. So I would say it's an acceleration even from the digitization that we've seen so far.
Yeah, I'll keep it short as well. So I hope that just companies in the next 5 years will embrace new technologies, and I know many are, but it will be a more mainstream thing to use AI, and that we have clear guidelines how to use it. And then maybe a second thing, I hope Metamaze will be as famous as the metaverse. That's maybe a personal wish, but that's it.
You would like it.
No, I'll be very short. I hope that in 5 years from now, we'll be looking back at 2021, 2022 as a year where people started to use technology to really progress a number of societal issues, mobility, ecology, health, and that we will have way more technology optimism than what we have today. Because if with the right boundaries, I think technology can solve a lot of big societal challenges.
Thank you. So let's make a positive conclusion of this panel. We can say that things seem to be going better now, and it's time for reconstruction and redevelopment. Thank you for being with us today, and thank you all for joining this discussion, and see you soon.